If you check your time, you see it's exactly 1 p.m. West African time. That means it's time to get update from the world of business. It's going to be 55 minutes of business talks right here, Business Incorporated. And today on the program, we are focusing on Bitcoin ETF finally gets a real approval from SEC. We'll discuss that on the program today. And Ghana automates transport system. What does that mean and what good will come out of that? In Nigeria, the continuous fall in the value of the Naira is a source of worry in spite of efforts. We'll discuss that also on the program today. Good afternoon, I'm Ini John Rekwa. This is Business Incorporated. 55 minutes is what stands ahead of you. Now let's start from the global space. Global oil prices edge high on Thursday on concerns about escalating conflict in the Middle East, with more attacks on Gaza and on shipping in the Red Sea, even as a surprise build in U.S. crude stockpiles capped the gains. Let's look at the numbers right there. It's a green for the Brent, 0.7% up at $77.36 a barrel. For WTI from the United States, it's $71.87 for a barrel. That's also up. I mean, it's unusual to see them go up at the same level, but that's what we have there. Oil prices edge higher on Thursday on concerns of escalating conflict in the Middle East, as we've told you. And we see that the benchmarks settled low on Wednesday after a surprise jump in the U.S. crude stockpiles. From there, we go to the global grain space. Also, of course, geopolitical attacks and conflict is also affecting that, but Chicago soybean futures regained some ground on Thursday, but remain near the lowest levels. There you have it. Soybeans gained 0.9%, now at $12.47. We also have, also from the CBOT, we have prices also of soybeans that gone up. We have corn futures. They were close to their lowest since December 2020. Wheat also went up. There you have it. Corn up 0.3% at $4.61. And we know that Argentina's corn harvest also is expected to reach a record of 59 million metric tons. We've seen good weather coming and good weather forecast also coming for Brazil. That has also affected the price of the commodities in recent years.
And the management of the Nigeria Customs Service has gathered here to assess the agency's efforts for the year 2023. Among successes recorded in 2023 is the attainment of a 3 trillion Naira revenue, marking a 21.4% increase over that of 2022. This feat, however, is not without some challenges.
This record is particularly remarkable given the challenge within the operational environment. Operational challenges such as the lower transaction volumes that we recorded during the year, issues of compliance management, inadequate infrastructure, and capacity gaps, which compounded by delays in policy implementation and socio-political factors. Also, the anxieties associated with a major election year, the prolonged cash crunch linked to the introduction of higher denominations of the Naira, and which temporarily impacted the purchasing powers and the overall economic activities.
Looking into the future, the service wants to deploy technology, increase collaboration on trade facilitation, the restructuring of its electronic auction platform, amongst other plans.
Currently, the places that are open are Seme, Idiroko, officially. Those are the borders that are open, Seme in Seme Command and Idiroko in Ogunwan Command. There are still discussions ongoing within the country, Office of the National Security Advisor, and with our counterparts in Republic of Benin to ensure that we put in place the requirements, have a shared understanding of what we need to do and how we have to monitor.
Owing to the impact of currency exchange variations on trade dynamics and revenue collection, the Nigeria Customs Service says it is strategizing in 2024 to regularly ensure optimal revenue performance. Sarah Chimugu, Channels Television News.
All right, so we need experts, and so I guess we'll have to have a conversation on whether the customs priority should be facilitating exports or, you know, such a revenue target. But let's take a break now. When we come back on Business Incorporated, we'll head to the market, to London and Berlin. A whole lot waiting for you. Just stick with us. Welcome back. Still watching Business Incorporated right here on Channels Television. We head to Berlin, where Lars is standing by, and he wants to talk about the Consumer Electronics Show in Las Vegas. But the CES, for short, is the world's largest tech event. And so it's rather unusual to see a keynote address not from the great tech company out there, but from a German industrial giant, Siemens. Siemens has been in the news from late last year, even up to now. Well, Lars, I'm sure you have the details. Good afternoon.
Thanks for having me, Ini. Well, I can tell you that it was most unusual to find Siemens CEO Roland Busch as one of the keynote speakers, and it was kind of surprising that he was wearing a plain white T-shirt and a leather jacket. Usually back home, he's wearing a more traditional business suit and a tie, but I guess his change of outfit is kind of symbolic for the change his company is undergoing as well, changing from an industrial giant into a tech and data company. The strategy is clear: to digitalize the industry and make better use of data to speed up and streamline industrial processes. And that is a growth market and definitely a business that can be applied to absolutely any industry anywhere in the world. See, I can't imagine any business right off the top of my head that can't be improved and streamlined by a good use of lots of data. Siemens has used its own factories actually to show how they can work better when they're connected. They had one plant in Germany. They made a digital copy and built the exact same plant in China, then linked them. And during COVID, when much of China was shut down and supply chains were strained the world over, these plants actually outperformed others because the one in Germany could pick up the slack where needed, because they were following along in real time what progress was made or not made over in China.
Yeah, well, in spite of all of this, there's a lot of competition out there. What are the chances that Siemens has?
Yeah, they're pretty good. At least that's what some experts are thinking. Let me give you one example where Siemens is working on a technology that others are also looking at. VR goggles, that's those ski goggle type gadgets that you can put on to find yourself in a virtual or at least in an augmented reality. Siemens is working on that for professional use, for example, for architects who can program their buildings and then put on glasses to virtually see what they look like, even to move around through different rooms. At CES, they're also showing off a steering wheel that was developed in VR, and they're saying that soon entire cars can be developed in VR using these goggles, and that they would make the entire process of product development faster and more efficient. Now, you're probably thinking others have these goggles too, and that's right. Facebook or Meta, for that matter, they're working on it, except industry experts think that Siemens will be able to use its knowledge and contacts throughout the global industrial landscape to get a product to market there, while Meta doesn't have these contacts or even these insights. Meta is developing goggles more with an eye on the consumer, gamers, for example, and that is the big difference here, and it's a huge opportunity for Siemens in the future.
I wonder how this is affecting investor sentiment towards AI products on the market.
Yeah, it's crypto day. It finally happened. The SEC has officially approved crypto ETFs, exchange-traded funds for investors to get into Bitcoin and other virtual currencies without actually holding those currencies themselves. But what a lead-up it was to this news. Just yesterday, the SEC had its Twitter account hacked, and someone posted that such an ETF was now approved. The SEC then said, hold your horses, we're not quite there yet, when in fact it seems they were there already, just delayed the news by another day. It's all very strange. What will investors make out of it? Well, in the long run, such a snafu won't have much impact on ETFs and on cryptos in general, I guess. But for today and getting into the rest of the trading week, we'll have to really keep an eye on cryptos for sure. Generally, it's to be expected that they will attract a lot more money from investors who might have been hesitant before. Some analysts say cryptos could draw $50 to $100 billion in new funds this year alone, now that the SEC has given it a stamp of approval.
Yeah, well, and we expect other coins will also follow suit in other countries, not just in the United States. But thank you so much, Lars, for that. Now, I believe we have Dr. Sumoni now. Dr. Sumoni, can you hear me? Can I hear you?
Hear me?
Can you hear me?
Yes, I can.
Great, now I can hear you. So, then we're talking about the issue of power and alternative sources of power. We see gas in the global space is moving, and, a lot of talks about it, LNG, LPG, and all of that. Tell us about what's going on in the global space and then how it affects us. I saw a story the other day about gas, with what's going on around the Red Sea, that might even affect the energy costs in Europe. But paint a picture for us what's going on.
Thank you, Ini. So what's going on now, at least in the European LNG market, is Typically, the European energy market is sensitive towards concerns of supply risks. So we've seen over the weekend, we saw how we saw escalations in geopolitical tensions in the Middle East. In particular, we saw the largest missile strike in the Suez Canal by the Houthi rebels, and this raised concerns about supply for EU, particularly because the Suez Canal is the shortest travel link between the Middle East and the EU. Even though there's no physical impact, there's no impact on physical supply, yet just the risk of that raised, I think, the prices of LNG in Europe. Also, we are seeing in Europe, we are seeing a cold snap this week and next week are projected to be extremely cold in Europe. In the UK, for example, we are seeing temperatures go as low as 0 degrees, and they are forecast to go as low as -5 degrees in the coming weeks. And that has increased the demand for natural gas for heating. However, natural gas storage in the EU is still quite robust. At the moment, they are still around 95-98% full, both in the UK and in Europe. But also in Asia, we are seeing a warmer winter. We are seeing a huge build-up in inventories of natural gas in Asia, which is kind of reducing competition for natural gas in the EU. So that's just a simple picture of the natural gas markets.
Yeah, and now, of course, the same factor, the Red Sea attacks and threat, is also telling on oil. Global oil receipts gained 0.7%, both Brent and WTI. Indeed,
Ini. So that's, I think, one key factor that's going to drive commodity markets this year is geopolitical tension. So earlier this week, we saw escalation in the Middle East, like I mentioned earlier, and that weighed on supported the prices of crude oil. But on the other hand, we also saw force majeure in Libya, one of the largest oil fields in Libya, the Sahara oil field in Libya. They declared force majeure, which is taking off around 300,000 barrels of crude oil offline. On the other hand, in the United States, we saw a surprise build-up in crude stockpiles Analysts expected a drawdown in crude stockpiles for last week, but instead we saw a buildup of around 1.34 million barrels. In addition, we also saw a surprise buildup in gasoline and diesel stockpiles in the US, which kind of signals to weak demand. Although it could also be driven by seasonalities, but there are talks that it is probably driven by weak demand. So we are seeing those two factors drive oil prices. We expect oil prices to be volatile going forward, and a key factor in that will be geopolitical tensions.
And I wonder how that affects Nigeria, our budget, and our revenue.
Indeed, I think for Nigeria, the biggest issue will be our oil production, Nigeria being able to get their oil production up. Currently, our oil production is about 1.2 million barrels. We expect that this year, even though with the geopolitical tensions, except there's a major shock, we think that oil prices will still remain relatively elevated this year, given OPEC's cuts, as well as OPEC plus compliance to the cuts. We expect that oil prices will still be in the 70s this year. So if Nigeria is able to increase its oil production, then we'll be able to, get some of those revenues that we expected. Also, take into consideration that Nigeria doesn't really plan to borrow from the Eurobond market this year because interest rates are still quite high, and our debt to revenue ratio is also significantly high.
And then we're still seeing the Naira drop in spite of, the Afrexim Bank input, and we saw our reserve, gain a bit, and we're hoping that will translate into some value in the Naira.
I think for the Naira, it's a much more bigger issue than that. Number one is market investors do not like uncertainty, right? And right now we are still seeing quite a lot of uncertainty. You mentioned earlier that we need a voice, right? We need a face, right? And last year, for example, we had only 4 monetary policy committee meetings, and 2 of them were cancelled. 2 of those meetings were cancelled. This year, we expect a meeting this month, but we don't know yet whether that meeting is going to hold or not. So one, markets need some form of policy direction, credible policy direction. Where are we going in terms of monetary policy? That is one. Number 2 is the backlogs, right? Investors are still not, particularly foreign portfolio investments, which we quite need to help prop up the Naira, and not really bringing in money into the country because of there's still a huge backlog. I understand that the central bank is making progress in settling some of those backlogs, but there's still around $5 billion that is stuck in Nigeria. And with that, the inflow of new money into the country is going to be quite muted. We're also seeing a huge money supply, and with that, we are seeing the central bank trying to mop up the money supply using OMO. If you look at the OMO auctions, the stop rate for 1-year bill is now around 17%. We're also seeing, talking to some of my folks at the treasuries at banks, we are seeing random CRR debits, which also signals that the central bank is trying to mop up excess liquidity. But I think the biggest issue we need is some policy direction on how the CBN aims to reduce this backlog, and whether this flexible market-determined exchange rate is real.
All right. Well, as you said, I join you, Adesola, because we need a face and a voice, not just statements from the central bank. It gives a kind of uncertainty, and confidence to the markets and investors. Thank you so much for sharing your time and thoughts with us, Dr. Adesola Somoni, Senior Analyst with Financial Derivatives Company.
Thank you for having me.
Well, talking about mopping up some money and all of that, Anyeti Edet comes in now to tell us the latest from the markets.
Yeah. Good afternoon, Ini.
Good afternoon.
Yes, and so all the stock markets recorded its first pullback, what you call profit-taking years, and that's the first for 2024. Remember, we were
the first time we'll see the bear.
Exactly, the bear has just decided to make its own Happy New Year greeting. So that's just what you might call. But so far, I was checking the market. I'll be giving you details about the market. But
intraday, yeah?
Yes, at intraday. So let's get straight to the intraday market performance. Take a look at your board there. Nigeria's stock market, all the way from 83,000 points to about 81,000, is still oscillating as we speak. This is intraday figures, so it was down by more than 1.5%. But I checked some few minutes ago, and it was back in the 82,000 points. But it's still oscillating in between this figure. Then, for so far, in terms of year-to-date, we're down by about 9.70%, all the way from 11%, which we had about some 2 days ago. And then in terms of value, in value terms, it was down on Wednesday at about 638.85 billion naira. In dollar terms, that amounts to about $671.42 million. So that's it. Now, for the other side of the market, that's for the stock for the South Africa's JSE. The JSE index was down by 0.21%. We saw kind of mixed sentiments for that market. On the other side of the for the African markets, we saw pullbacks from the Egyptian Stock Exchange as well as the Kenyan Stock Exchange, which was as at Wednesday was down by 1.04%. Now let's talk to Caleb Alimi to give us details. We had first the two auctions yesterday, the open market operations as well as the Nigerian Treasury Bills market, the first for 2024. So now Caleb will be giving us details about the results of that market. Thank you for joining us, Caleb.
Thank you for having me, Anita. Good morning. Good afternoon.
Yeah. Okay, so now we know that the open market operations, it came in as a surprise. Yesterday, you traders, you were expecting just the Treasury Bills auction, but wow, the open market operations came in and it was a kind of a mixed bag. We saw the outcome. First of all, there was an oversubscription for the 363-day bills, but then an undersubscription for the two other bills. Give us more details about this. Hello, Caleb.
Hello?
Hello, Caleb. Yeah, can you hear me?
Yes, I can.
Okay, yeah. I was asking, I said, we saw an oversubscription of 157 billion naira on the 363-day bills for the open market operation, but then an undersubscription for two other dated papers. So now, can you give us details about that first OMO and NTB auctions carried out in Wednesday's session?
Like you mentioned, the OMO was a surprise. It was a huge surprise. You know, the OMO is at the time when the market was just focused on the NTB auction. Yes, the OMO auction, clearly, you know, market prefers that because the CBN would definitely or try to mop up liquidity at a very high cost or at a very high rate most of the time. The OMO is often a signal rate to the market, you know. So yes, the OMO auction was a surprise, and then it cleared at the 1 year paper cleared at a maximum rate of 17.75. You know, the other two papers, which is the 91 day and 182 days, did not see a lot of interest, and you know, those ones came out at 10.5 and 14%. You know, if we compare that to the NTB auction saw over 1 trillion naira in subscription, you know, for just about a little over 50 billion in total offer. And the focus is always on the 1 year paper as usual. You know, so we saw the 1 year paper close at 8.399%, which is, you know, almost 1,000 basis points lower than where the OMO auction for the same maturity closed. Intraday, what we're seeing is there's a lot of demand on the OMO paper because OMO can only be traded among banks, you know, and other foreign portfolio investors. We're seeing a lot of, you know, trading on that paper, and it has also contracted significantly. There's also interest in the NTB papers where we have the asset managers, the pension funds, and other investors. That is what they have access to. So we're seeing interest in the 1 year paper as well, at the 1 year NTB as well, which closed at 8.399%.
Okay, so now let's talk inflation. Inflation, which is a very, very big issue across the world. Nigeria's inflation is, the official inflation data is expected to be released on Monday next week, but we have projections that it is expected to go higher to about 28.7%, up from 28.2%. And at the same time today, in a couple of hours from now, we'll be having the U.S. inflation data. So how are all this going to play into the market, starting first with the U.S. inflation rate on the Nigeria's financial market and Nigeria's inflation report due to be out next week?
So let's start with the U.S. inflation, right? The U.S. inflation largely does not affect our local market. What it affects is our ability to borrow offshore. And so what it impacts is directly is our Eurobonds, the pricing of our Eurobonds. Now, regardless of expectation is that inflation begins to slow down in America, and the market has sort of priced that in. What we're seeing, and also the market is anticipating that inflation has consistently slowed in America, so the US Fed will begin to cut interest rates. Now, market is expecting a cut in interest rates. As a result of that, we are seeing a contraction in the 10-year US Treasury yields, and that then that serves as a benchmark to all other assets in that track that security. What we're seeing for the Nigerian paper is our own yields are also contracting, which means should Nigeria come to borrow from the international market today, they'll be paying cheaper than what it was, say, 6 months ago, right? And that's what we expect to continue to happen. So US inflation will largely affect our Eurobonds. And currently what we're saying is US inflation is slowing down, and the market is expecting the US Fed to cut rates or to at least pause its rate hikes. And that will then impact, positively on our borrowing costs for dollars. Now, locally for locally for Nigerian inflation and how it affects Nigerian investors or Nigerian bonds. The only thing that we could see, historically, we have not had where fixed income yields outplay or outweigh inflation, and we don't see that happening anytime soon. What can possibly happen is, sort of narrows the gap between inflation and fixed income yields sort of narrows. So for the Nigerian investor, unfortunately, we will continue to get negative, real return vis-a-vis inflation.
Okay, so now that takes me to my final question with you, just a few seconds. That's now, the MPC, we've skipped, under the new CBN governor's leadership, Yemi Cardoso, we've skipped two monetary policy meetings. But now we were expecting to have one, the very first, under the new leadership of the CBN this month, and the month is almost halving. So what are we still expecting this meeting for the monetary policy direction?
So this CBN, the communication from them hasn't been very clear. I hope that, before the end of this week or before the end of next week, we'll probably get a concrete information on when the MPC will hold. If you look at the CBN websites where you have the MPC calendar for the year, it is still last year's calendar that is there. Last year's meeting for January held on the 23rd and 24th. So let's just say we still have some time for them to come out to announce or possibly change the calendar and tell us that the meeting is going to happen. Market is looking forward to that because it gives a lot of clarity, it gives a lot of direction, and some sort of forward guidance. So we're really anticipating when they come up with that. But again, the CBN governor, the new CBN governor, that's Dr. Yemi Cardoso, made us understand that the CBN is only required to have that meeting a maximum or a minimum of 4 times. And so there's still time to achieve that in the course of the year. So if it doesn't happen in January, it can happen later in the year. And so as long as they meet there 4 times, then they're covered. But the market is, looking forward to the clarity that comes from that meeting. We hope to get some sort of information before the end of the month.
Okay, so of course the markets and as well as journalists will be looking out for that, especially when policy decisions are to be made for the country. So thank you so much for that analysis and the outlook, Caleb. So that was Caleb Alimi.
Thank you.
Caleb Alimi, Chief Dealer at Providence Bank, giving us details about the fixed income market at intraday. So now let's move over to the Middle East markets. We saw mostly positive sentiments at intraday. The Saudi's stock exchanges index, it made a rebound. But first, starting with the Abu Dhabi stock exchange, we had the Abu Dhabi's main index. It was up by 0.09%. Dubai was also up by 0.11%. And of course, we told you this week that the Dubai, they're increasing their partnership with investors in India. And then I talked about the Saudi stock exchange. It was the only decliner within the region, down by about 0.32% here. The Qatar Stock Exchange Index, it was up by 0.32%. Talking about the Saudi Arabia's Tadawul, it had launched a new index as at Sunday this week, which tracks the top 50 companies ranked by their market value. And of course, that's the biggest boss on the Middle Eastern stock exchanges. So now let's flip over to the Asian markets. Asia, we saw the index was more of a downer, not too much of activity there. But for the Nikkei, sorry, we have not that correct figure. We had the Nikkei at about a 34-year high. It had crossed the 35,000 level, and that's because we saw them reacting to some news across the markets there. Still within the region, we saw the Hang Seng index is surged by 1.32%, and then at the close of Wednesday's closing session, while South Korea's Kospi was the only benchmark index to decline after the country's central bank left its interest rate unchanged at 3.50%. Let's move over to U.S. market, where we saw the stock futures climbing higher ahead of the inflation data due to be released later today. Stocks tied to the S&P 500, they inched up. There you can see there 0.14%, while the NASDAQ futures, that's where you have all the tech giants there, the Microsofts, the Googles, the Apples, the Netflixes, all of them, all the tech heavies, they're here, and they revved up that market. That's in terms of the futures, later to be opening at 2:30 Nigerian time here. So that's it for that market. And of course, INI, our eyes are always across all the markets, but Nigeria's stock market, well, you know, we're still expecting the bull to make a return at the close of Thursday's trading session.
I'm sure the sentiment is still positive, but you know, the thing about the NGX we're expecting really soon is our own tech platform. Yes. You know, we hope to see that. The NGX promised us we will get it, so maybe first quarter we'll get that. And I think I saw news yesterday that about 1 or 2 listings are expected on that platform.
Startups.
So we'll have our own NASDAQ also.
Exactly.
And we're reporting our tech companies.
Our very first tech startups.
Exactly. Thank you so much, Enite. All right, now let's move to London, where Juliana is standing by I think we'll begin with some good news, but I don't know how real this good news is. Thank God we have Juliana right there in the UK. Juliana, good afternoon. So there are forecasts that by April, inflation is going to be at 2%. But, you know, sometimes the numbers do not match the reality. So I thought to ask you how much of a reflection we see this heading towards 2% in daily living and daily spending, the supermarket, the groceries, and all of that.
Good afternoon, Ini. Well, we're not seeing a reflection just yet. In fact, it was just yesterday, wasn't it, that Danone, the big manufacturing food firm, said that they were going to have to reduce the price of their baby formula because it's increased by 25% in the past 2 years alone. So that just is a reflection of the cost of living crisis in the UK. We're still not seeing things trickle down just yet. But back to what you were talking about with these forecasts from the likes of Deutsche Bank and others, if they are accurate, then what we would see is a return to the benchmark rate of 2% from the Bank of England, which we haven't seen since July 2021. It has been that long since inflation has been that low. But of course, you know, there is light on the horizon, we hope, because in just the past year, we have seen inflation fall down from some of those highs of this time last year, where it was at 11%, to at 3.9% where it was in October. We are going to be getting next week, Wednesday, from the Office for National Statistics, inflation for the month of November, and we do expect it to fall probably quite rapidly, but that will be our first hint. So why is this all happening? I think it's mainly because we have seen a fall in the price of wholesale gas and electricity. We know since the war in Ukraine, that was one of the main reasons why inflation was so high in the UK, because we were paying so much for our energy bills. Of course, the British government have put help in place for households that need it, but perhaps we may start seeing prices fall even further, particularly as, of course, it is getting warmer in this country. Also, we've seen a drop in petrol prices and, of course, food. However, there are headwinds. There are always going to be headwinds when we're talking about the British economy. And I think what forecasters have been concerned about is what's happening in April. And that is the time when the national minimum wage is going to rise. I believe it's going to be rising by about 2.5% for people on the lowest wages. So, of course, course, what that means is when you have more money, you spend more money. So inflation could perhaps go up, particularly within the services sector, which is the all-important sector here in the UK. So as it always is in a mixed bag of fortune, again, we're looking in the rearview mirror when it comes to a lot of this forensic data. We're not actually seeing what's happening now. And according to the British Retail Consortium, from what we discussed earlier this week, it wasn't the best Christmas. So yes, let's just wait and see what GDP data says on Friday, and then on Wednesday we'll have a look at the inflation to see if it is on target to reach 2%.
All right, we'll wait and see. But Boohoo is putting made in UK labels on clothes made outside the UK. And I'm wondering why. Are consumers okay with this?
I don't think consumers are okay. I did have a quick look on X, formerly known as Twitter, and once again, Boohoo are trending. Boohoo are a fast fashion retailer, really popular amongst Gen Z and others, but it has had a string of controversy over the past couple of years, particularly concerning this factory in Leicester called Thermaston Lane. It was actually once dubbed a manufacturing excellence site in England, but that reputation has gone in the bin as more revelations have been coming out. And there is another revelation from an investigation by the BBC, basically looking at practices in that controversial Leicester factory. And what was discovered between the period of March 2023 and October 2023 is that several garments that were produced in South Asia and shipped into England for it to be posted to consumers who purchased it, is that workers were ripping out labels that had said made in wherever that country was and replacing them with made in UK. Now, according to Boohoo, bosses at Boohoo have said that, you know, this was a human error and that there was some discrepancies when it came to the knowledge that their staff had about labelling. But again, it just goes to show that perhaps some of their practices have been below board, that they're not keeping up to standards. Going back to the 2020 initial probe about them, they were paying some of the staff in Leicester as low as about £2 per hour, and they were working in pretty horrific conditions when the world was locked down during COVID. So yeah, not great. Boohoo have come out and said that, you know, look, they weren't doing it purposefully, but it does raise questions about fast fashion, because we know fast fashion contributes to climate change, because a lot of those clothes, they're so cheap, you can only wear them once or twice, and they end up in landfills. So yeah, not great revelations. And apparently, according to Boohoo, following the investigation by the BBC, this particular factory in Leicester may be closing, which would lead to the job losses of hundreds of people. So yeah, pretty controversial revelations from the Beeb today in the UK.
Yeah, well, not a good way to start the year for business, but well, we'll see how they handle it. Let's get to the markets now, see how that's looking.
Yeah, markets tip-top shape as we wait for the all-important US inflation figure. Of course, US inflation as well as interest rate, hot topic as we head into Davos next week. The FTSE All-Share is up. It's up by 0.18%. The FTSE 100 is up by 0.13%. In the FTSE 250, the domestic market up by 0.33%. In the currencies market, the British pound is currently trading down, though, down against US dollar by 0.01%, though up against the euro by 0.06%, and down against the Japanese yen at intraday by 0.17% in A.
All right, Juliana, thank you so much for that. Let's take some news from the continent here in Africa, beginning with Nigeria. The Nigerian Naira extended its decline, crossing the 1,000 Naira for a dollar mark for the second time in 2024, barely 2 weeks into the year. And that happened on the official market. As we know, on the parallel market, this is a norm. The Naira fell to 1,089 Naira 51 kobo for a dollar from 856 Naira 57 kobo the previous day, and that's on the Nigerian Autonomous Foreign Exchange Market, NAFEM, and according to data from FMDQ Exchange, the first time the local currency closed at over 1,000 against the greenback this year was on January the 3rd, 2024, when it tumbled to 1,034 Naira 12 kobo for a dollar. at the NAFEM. Now, we're supposed to have the president of the Association of Bureau de Change Operators of Nigeria join us to discuss this. Unfortunately, I believe he's caught up in a meeting and is not able, but we will get his views and share them with you either live or recorded. We promise to work on that and hope to get him, to share his thoughts on how this can, so many strategies have been applied by the government. We thought that the Afrexim contribution, to the FX would solve this problem. Apparently, we hoped wrong. We still have that accumulated backlog as a major factor to this. Well, moving away from Nigeria now, the Minister of Transport in Ghana, Kwaku Ofori-Asiame, has launched Transport Ghana to digitize as well as automate the operations and regulations of road transport services in the country. The project, which is aimed at improving efficiency and effectiveness of the commercial road transport services in the country, is intended to also help minimize road transport traffic casualties by at least 50% by the end of 2030. Well, it's a crypto day today, as Last told us earlier. Finally, first the fluke and now the real thing. I believe maybe this is still a test. I don't know. Laddie.
This is not a test.
Oh,
this point.
Was that your broadcast voice?
Yes,
or your crypto
my
voice?
Announcement.
Oh, okay.
Voice,
all right. We have to check.
The US SEC.
Oh, okay.
Yes.
I think we still have to check. You warned us yesterday that even when we hear such news we have to wait
for a reconfirmation.
Exactly. So are you here to give us the reconfirmation of that?
Yes, well, from what I've heard now.
Yes, say.
It's still on at this point. We still have a Bitcoin spot ETF, a historic moment right there in the crypto industry. Last time they tried to get one, that was the Winklevoss twins. It wasn't approved. But now we're seeing inflow projections at this point. The amount of money they're expecting, to flow into the market with this spot Bitcoin ETF. Standard Chartered is projecting 2024 could see $50 to $100 billion inflow into the market because of this. Bitwise, they've confirmed that their customers, they have about 100 million plus waiting, $100 million plus dollars. Then Bloomberg is anticipating a record-breaking $4 billion inflow at this time. Let's take a look at some of the Bitcoin ETF issuers. There we see iShares. There are about 12 of them. But see iShares Bitcoin Trust. Their fees are 0.12%, quite less compared to other ones. We see Hashdex Bitcoin ETF, DeFi, that's the biggest one there, about 0.90%. So if you're going to be using any of these at this point, that's the amount you're going to be paying in fees. Let's bring in Olumide Adesina, our financial market analyst. Hello, Olumide, great to have you.
Yeah, good to have me, Randy. It's
fantastic. Yeah, it's a watershed moment. That's how it's been described, at this point. But we've all been waiting for this moment. Bitcoin spot ETF. Now it's here. What next?
Well, I think looking at recent price action, we could see the rally picking up midday and Bitcoin breaking above 47,000 resistance. Market value close to $1 trillion. But I think the star in the room right now is Ethereum. If you look at Ethereum Classic, in the past 24 hours, it's up by nearly 50%. And that is on the sentiments that an Ethereum spot ETF is coming to play with likes of BlackRock, Invesco. And you understood how that rally pushed Bitcoin in 2023. Bitcoin rallied by 150% on the optimism. Well, I think it's really much the news have been priced in the markets despite the recent uptick in the crypto market, because a lot of critics are doubting the surge that we saw in gold spot ETF, because gold is already physical, Bitcoin is already digital, and institutional investment in that side would definitely be dependent on how the US Fed plays its monetary rule. And that's why in the next 30 minutes, we're waiting for the US inflation data. An uptick in that data definitely will be bad news for the crypto market in the short term. But definitely Standard Chartered's projection about influx of liquidity in that market is not far-fetched. But the question is, would it really matter at this moment.
Right, will it really matter? But, you know, it said the ETF allows you to have exposure to an asset without actually holding, you know, that asset. So with this now, investors can own an ETF without owning Bitcoin. But for you, which one is better? Because you know that narrative in the crypto market, not your keys, not your wallet. You know, with the ETF, how does that work, you know, at this point? Is it better to hold, you know, the Bitcoin or just hold the ETF? Which is easier?
Yeah, so I think it's different strokes for different folks. For someone like Ladi or me, for example, I think holding the spot would definitely be a no-brainer because we understand the sophistication on how to deal with this asset. But and holding like JP Morgan or traditional investors, you know, we definitely don't have that capability or understanding. So they will prefer to really hold the assets, underlying assets, and that's why ETF are much more attractive. These are things you see in financial markets. So
right.
I think it makes it more optional for institutional investors, for investors that don't want to get to the risky aspect of holding this asset, despite the fundamental advantage of having the spots in play. So it opens the door for those kind of investors, and that's why Standard Chartered had that projection of inflow of capital, particularly from institutional investors. But the real question right now is, how far will this go? Because we have a US election later this year. We have geopolitical concern. The US liquidity, FX liquidity in emerging markets is still a concern. So while we are optimistic about Bitcoin rallying, breaking above the 50,000, I think caution must reign.
Caution. Thank you so much, Olumide Additional, financial market analyst. Thank you. All right, so there you have it. So what's your flavor, you know, at this point? Would you rather hold, you know, Bitcoin itself
or the
just
ETF?
Get one of the ETFs and
I think what Olumide just brought up, being cautious, is also very, very important.
Very important.
We don't get caught up in the excitement to see how much we're expecting to come in through this, and we forget what we're supposed to do.
Exactly. Don't forget risk management and all of this euphoria.
Thank you so much, Ladi. Well, that's it on the program. Thank you so much for being a part of this 55 minutes. I hope the update from the world of business was worth your time. You can watch it anytime, youtube.com/channelsweb. I'll see you at 10 p.m. for the stock market reports. Perhaps the bull will be back. We'll see.